Hi guys, and welcome back to my channel Living in Canada. In today's video, I want to talk about the Ontario Staycation Tax Credit. Can you believe that this year the government will actually pay you to go on vacation? Just imagine if you and your family were to go on a trip, let's say to Niagara Falls, and you would actually get back $200, $300, or even $400. That sounds really good, doesn't it? Well, in today's video, I'm going to go into the details of the Staycation Tax Credit, how it works, and also give you some examples. But first of all, in case you're new to this channel, then welcome. On this channel, I make videos related to studying, working, traveling, transportation, and I give tips that are especially useful to those of you who are new here in Canada. So let's start. The Staycation Tax Credit was launched earlier this year in January with the goal to encourage Ontario families to explore the province of Ontario so that the money actually stays here in the province.
If I can't taste wine in Tuscany, I can do it right here in Ontario.
The Ontario government expects nearly 2 million families to benefit from this $270 million program.
And what it does is that it helps people with their travel budget. So in case you want to travel, but you feel like you're a bit short on money, then you can save some money by using this tax credit program. But at the same time, it also helps businesses here in Ontario so they can get through these difficult times. As a rough overview of this program, Ontario residents can claim 20% of their eligible 2022 accommodation expenses. For example, a stay at a hotel, cottage, or campground when filing their personal income tax and benefit return for 2022. You can claim eligible expenses up to $1,000 as an individual or $2,000 if you have a spouse, common law partner, or eligible children. You get back up to $200 as an individual or $400 as a family. So let's break this down in more detail. By the way, guys, if you find this video useful so far, I would really appreciate it if you would hit the like button because that would help me to get this video out to more people. And also, if you don't want to miss out on my next video, make sure that you're subscribed to this channel, and also very important, set the notification bell to all notifications so that YouTube will notify you each and every time there's a new video from me. Let's first talk about who is eligible. You might be wondering, in case you're not a citizen yet or not PR here in Canada, whether or not you are actually eligible to use this tax credit. And the answer is yes, with one condition: as long as you are an Ontario resident. So on the ontario.ca website, it says that you are eligible to claim the credit if you are an Ontario resident on December 31st, 2022. So even though you are not PR yet and not Canadian citizen yet, as long as you are an Ontario resident by the end of the year, then you are eligible to use this tax credit. So really great news for those of you who are students or workers here who are already Ontario residents. Now let's go to who can claim. Only one person in the family can claim. If you don't have a spouse, if you are single, if you don't have a spouse or common law partner, then obviously you yourself would be claiming this tax credit. But if you have a family, a spouse, common law partner, or an eligible child, here it says, then only one person in the family should claim the tax credit. You cannot double claim and benefit twice from your same trip. Now let's get to what kind of expenses exactly are actually eligible for this tax credit program. You can claim the Ontario Staycation Tax Credit only for accommodation expenses. So not for food, not for your sightseeing expenses, museum tickets, transportation, and so on. It is strictly for accommodation only. And what's also important to note here is that you can only claim the tax credit for leisure stays in Ontario that are less than a month. And important to note here is the word leisure. So if you're going on a business trip and staying at the Sheraton or so, then you cannot claim this tax credit. It is purely for leisure. The tax credit program is also very clear on what kind of accommodations are part of this program. And these include short-term accommodation or camping accommodation such as hotel, motel, resort, lodge, bed and breakfast establishments, cottages, campgrounds, and vacation rental properties. And also, this tax credit only applies to stays made from January 1st, 2022 to December 31st, 2022. The next important thing regards who made the payment for the accommodation. The accommodation expenses must have been made by you, your spouse, or common law partner, or eligible child. So that means that if you go on a trip, let's say with your parents, and your mom pays the accommodation, then you will not be able to claim the tax credit. And because when claiming the tax credit, you actually need to prove that you made this trip, you also need a receipt that was issued by the business. And here it says that it needs to be a detailed receipt provided by the supplier who is registered for GST, HST. So those were the requirements for the type of expenses that are eligible. Now let's get to the most exciting part, which is how much can you actually claim. The maximum expense limit that you can claim is $1,000 as an individual and $2,000 as a family. And note here that $1,000 and $2,000 is not the tax credit, but it is the limit for the accommodation expense. So if you were to make multiple trips this year, let's say 2 trips, and on one trip you spend $500 on accommodation, on the other trip you spend $300 on accommodation, you would be able to claim the tax credit on the expense of $700. But by the way, guys, I'm not a financial advisor. My goal is just to share with you about this tax credit program from what I read on the website and heard in the news, so you too can benefit from this awesome saving opportunity. One thing that's also very important is that you can only claim the tax credit for accommodation that has been booked either directly with the accommodation provider or through an online accommodation platform. One of the questions that you might have is, what if I go on a tour where transportation, accommodation, food, and so on is packaged into one? How does that work? So according to the Ontario.ca website, you can claim the tax credit, but only on the accommodation portion of the tour package expense. Okay, now we get into the nitty-gritty. When it comes time to file your personal income tax return, you want to make sure that you have all your documents, your receipts in place. And there are some things that definitely have to be on the receipt, which are the location of the accommodation, the amount that can be reasonably considered to be for the accommodation portion of a stay, the amount of GST or HST paid, the date of the stay, because it has to be in 2022, and the name of the payer, because it has to be you or someone in your family. And for all good things, there are usually also some exclusions. So there are some expenses which are ineligible, for which you cannot claim tax credits. Expenses that are ineligible include timeshare agreements or a stay on a boat, train, or vehicle that can be self-propelled. So too bad, even though you would love to stay on this beautiful boat over here, you would not be able to claim the tax credit on it. There are a few more expenses which are ineligible but are unlikely relevant to you, but in case you want to make sure, I really recommend you to go on the Ontario.ca website and read through the tax credit program for yourself. So now you might be thinking, great, but how do I actually get my money? How do I get this tax credit money into my account? So this is how it works. You can claim the credit on your personal income tax and benefit return for 2022. So you would do this in 2023 for the year of 2022. And the great thing is that this tax credit is a refundable tax credit, which means that if you are eligible, so if you fulfill all the requirements that we just talked about, you can get this tax credit regardless of whether you owe income tax for 2022. If you are an Ontario resident, then you can still claim this tax credit. So even if you owe $0 to the CRA, you would still be eligible for this tax credit. And now, as promised, let's get into the example, the case. And for this, I want to present to you my own trip to Niagara Falls that I made end of March, early April. As you can see, it was a 4 days and 3 nights trip. And by the way, I recently made a video on my trip to Niagara Falls with a complete itinerary, recommendations where to eat, transport, and so on. And you can watch this video by clicking on the link up here after you finish watching this video. So I went on a relaxing getaway to Niagara Falls with my husband, and we spent $725.15 in total. But that was on everything. That was on food, transportation, and accommodation. And remember, this staycation tax credit is only applicable to the accommodation portion. So if you look at my itinerary, you can see that on day 1, I spent $333.55 on the Blue Gables Bed and Breakfast Inn. So that was our accommodation for the 3 days. And the rest of this is basically transportation, GO train, bus, food, sightseeing, and so on. So the only expense that I could claim for this tax credit program would be the Blue Gables Bed and Breakfast in the amount of $333.55. And I'm able to claim this tax credit because I am and will still be an Ontario resident by December 31st, 2022. And this amount of $300 so-and-so is within the limit of $2,000 for a family because it's me and my spouse. And the accommodation is a bed and breakfast. It is not a boat or a train, which is part of the eligible expenses in this program. And very important, the purpose of my trip was leisure. It was not for business. Also, I did my booking on a booking platform, which is booking booking.com, and I have a receipt including the HST. But one thing I regret a bit is this. I actually requested a room upgrade at the bed and breakfast. So originally I would have paid something around $290 or so to the bed and breakfast, but because I requested this room upgrade on site, I paid $40 in cash to the owner. But unfortunately I did not ask for a receipt for that, and because I don't have the receipt, I cannot claim a tax credit on that portion of the expenses, which is still fine because it's just $40. Now let's see how much I can actually claim. So the accommodation portion of my trip to Niagara Falls was around $290. I'll have to check that exactly, and the tax credit is 20% of that. So 20% times $290 is $58. So next year after I file my taxes, I can get back $58. But that's not the end of the story, because remember, there is a maximum cap of $2,000 for accommodation in Ontario for a whole family, and so far we have only utilized $333.55. So if we make further trips this year to other cities in the province of Ontario, we can claim even more. By the way, last month we went to Montreal and we took the Via Rail, and our trip was just awesome, and we spent quite a bit on accommodation, but again, because it's not in Ontario, unfortunately we will not be able to claim that. But anyway, if you're interested to know about what it's like to take the Via Rail to Montreal, then I would recommend you to check out this video up here. Okay guys, that was it for today. Thank you so much for watching. Have an awesome day, and I'll see you again next time.